What setup are you hunting? That's one of the major questions for us traders, especially in the Stacey Burke system, to be answered. I'm a Stacey Burke style trader that enhanced the Stacey Burke system with some of his own elements, and in this video I will show you one of my favorite 3-star setups. How to identify it, how to trade it, and why I love it so much. So stay tuned. So what's the setup? It's a breakout continuation trade. It can be the previous day's breakout that it continues on the next day, or it can be at the same day. So the even better one is if the previous day breaks out, stays broken out, and the next day trades inside, maybe retests the daily breakout level, coming back down potentially with 3 sessions of drop into the New York session, and then you just take the continuation long, potentially with an 8-hour fake out low, back to the high of the day. Can be also going into a range expansions, but that's a high probability trade, is just to take it to the high of the day. If this range is large enough, this is a very high probability trade, and if it aligns with the higher time frames, this is one of my absolute favorite trades to take. And I will show you why, because many traders try to counter trend that. It can even be that you have a strong peak formation high here, and it kind of gives you a short signal in some kind, and people try to counter trend that already here and go short. So I rather take it long here, and this is a very high probability situation. Also in the Stacey system, this is not really very clearly anchored. So that's a kind of a day 2, day 3 trend trade. It's none of his classic signals. So let's look at it. So if we look at the core Stacey Burke trading principles, how does this align with these principles? So price is always in a box. What's our box? Our box here is the previous day high and low, and we are just trading with the trend back to the high of the box. So it's kind of an inside trade just to the extremes of the box. Other time frame traders driving. Why is this interesting in this respect? Because other time frame traders driving this move, if you are in a monthly, weekly bullish situation in a daily breakout, then you see already that higher time frame traders clearly want to have higher price. So that's the trend, and this is the trend you want to follow. Who is trapped? So as soon as you are out here and trading, pulling back down, no one is trapped yet. So you want to wait for the trap, and the trap then happens here typically. 8-hour fake out low into New York, dump and pump template on the day, trapping shorts, and then going all the way back to the high of the day. Then what's your setup? We already answered that. What's your setup is, in this case, a breakout continuation. Then timing levels, behavior of price, and sit on your hands. Timing level, behavior of price. So we really wait, of course, for New York session to open. Potentially New York open traps the shorts. Where are our levels? We look at the 8-hour, and we look at the daily low and this daily breakout level. So we want to be above this breakout level. We want to see how far are we from the daily low, and is there enough space to the previous day or to the high of the day. In best case, both are far enough away that this gives you a nice R3 plus trade with a stop loss below this level here. That's the trade and how it aligns with the Stacey Burke system. And now let's look a bit deeper in the theory and how this setup fits to all the criteria and signals. So here an example on the chart taken out of my playbook. So all the examples and things I will show you now are in my playbook, where I explain all my setups. This is one of the setups, and I show you the examples and the structure that relates to this specific setup. So here we have the week closing out potentially bullishly. We don't see that at the moment. Then Monday trades lower, does a fake out low here, coming back up again. So that's a day 1 3-day cycle then, especially after it hits here this previous day high. Then trading back down. This is then day 2 3-day cycle confirmed. This is the previous week's high. We are in a daily breakout and weekly breakout as soon as we are above this level here. And you see then here, we will look at this in a minute. What's the setup on the day? That's very important. The bias here is bullish as soon as we are above, so we are trading around that, so you need to be careful still. We are above the previous week closing price. That's also interesting to see here, and you always want to have this in your back. And then you get here a parabolic session setup. I will show you this afterwards. That's a nice continuation trade. So you get a peak formation high Asia, peak formation low London, and then you get a parabolic channel blow off into the New York session, going into a one full expansion of the peak formation high and low. And then you see here already that it's a very nice trade. You could take this to the previous day high or a range expansion. That's two different variations of the trade. So this is what it looks like on the chart. And now let's look at the theory behind this trade a bit. So the basic patterns of Stacey Burke's trades are mainly reversal trades. That's why I also love that trade so much. I mean, these are the major categories. You either have reversal trades, pump and dumps that then are indicated with 3 days of longs or shorts, and then first red day and then dumping back down. That's what most people are hunting for. I don't do that. I like the trades, but these are not my highest priority. Then you have parabolic trades that it's squeezing over a couple of days and then exploding. This can be on a lower time frame, but also on the higher time frame. This might be an inside day setup, for example. This trade we're looking now at is a continuation trade. So that's day 2, day 3, 3-day cycle, peak formation, continuation trades. Can be on the day or within the sessions, but it's a low-hanging fruit trade. You can take it from here as a continuation trade or as soon as it breaks out or down, going further. Why do I like that so much? Because they are very high probability. You have the trend in your back, and most people are counter trending that. That's why these trades typically get a lot of fuel. People trying to buy the low here and don't look at the bias, and then this is exactly the fuel you need and you take for your continuation trade into a range expansion or to the previous day high or low, as we discussed. So here you see it. How does this relate to a classic reversal trade? So the breakout continuation trade here, potentially coming out of a weekly breakout, fake out low, also the month potentially. Then you're breaking out, and here you see already my signals that I also use to judge that. That's a multi-timeframe system. I will show you this later in detail. As it breaks out here, most people are looking at these signals. Do we have a 3 days of longs? Do we get a first red day even? Could be. Even in the breakout continuation trade, you can have a first red day because it can pull back down deeply and then come up again. Then you are again in a breakout situation. But what we are looking at with this trade is more the bullish side. So we are looking at, are we in a daily breakout? Are the higher time frames aligning bullishly? Do we get an 8-hour fake out low and then we take it to the high of the day or to a full range expansion, as I said? Why do most people miss that trade? Because they don't take these parabolic longs. They have the fear of buying high. They always think if price is going high that far, it doesn't go higher. But that's a basic flaw of our thinking. Higher prices don't mean higher probability for a short. Higher prices mean it's accepted at the high, and the probability of even higher prices might be even higher. So that's something you need to rewire your brain. higher prices rather means more higher prices to come, and not what comes up needs to come down again. So this in comparison is what most people are looking for, and you see in the critical areas this can look pretty similar. So if you look at this here and this here, if as soon as you're trading below this daily breakout level, it comes up again, and then it's a short. As we lose that, then the multi-time frame signals are turning bearishly, and if you would be in a downtrend, this would be a very nice short. But if you are in an uptrend, then you rather look for a breakout continuation here and not for the short. But as you see, this is relatively similar, and sometimes the signals are not so clear and you need to wait for the last little moment to decide if it's going long or short. So if we look at also in my playbook how these signals and setups align. So what are we looking for on the day with such a setup? So you see here the classic signals. I extended the signals. For long signals you would have first green days, 3 days of shorts, day 0, inside day, and so on. And there's one signal that is not that clearly described. That's the day 2, day 3 trend. And for a day 2, day 3 trend, there is a couple of variations that make sense. As you see here, most make sense. And we now look at what is the pattern on the next day you want to see to take a long trade. And you see here that what makes most sense is not a parabolic reversal and not a deathline setup, of course, because there you would rather go in the other direction. But it's something like 3-session trading into a low, 3 sessions of drop, or the parabolic continuation patterns, and we will look at those right now. So if we look at the different patterns, so here the short squeeze patterns. So if you come, as we seen day before breakout, current day trading inside, these are the patterns you might look at. So you rather look at, you typically coming at from the high, but not necessarily. But if you're coming from the high, you're looking at a dump and pump template, meaning you want price to trade downwards, maybe 3 sessions into the daily breakout level, and then squeezing up again to the previous day high. That would be the classic pattern. Or you have 3 sessions consecutively trading lower, 3 sessions of drop, and then the squeeze. What you typically don't look at is the death line setup. That doesn't make sense because in this case it's not a real death line, or a parabolic reversal. This is nothing I would look for in this scenario. But I would rather look at also these ones here. If you're not trading from the high, previous day high, but it potentially opens lower, and then on the next day you just get a parabolic continuation pattern all day, then you just need to be sure that you have, if you take a trade, that you have enough space to previous day high, or that you have taking it after the breakout and go for a range expansion. But the classic patterns here, what you see very often, and what we also seen in the example I just showed you, is the parabolic session. So meaning it trades up, Asia makes a high, London makes a low, New York trades inside, and then it blows off. That's the classic pattern. Could also be that it pulls back down after the breakout to the very lows, and then from Asia just does a parabolic channel and then blows up to the top. That's the typical situations. Low-hanging fruit is then the entry. So if we go sideways all day and have enough space, maybe a higher high on the inside already, then we might also take a low-hanging fruit entry. So weekly template. So if we think about a moment about the weekly template. So it's very important, if you take such a trade, you need to be sure that you are in the right weekly template and at the right day also. Because of course you want to be careful once you're already on the backside of the week, 3 days of longs, and maybe the higher time frames are not completely bullish, then you will want to be very careful with these parabolic continuation trades. There it might really be that it's already heavy and you're looking for a short. So you want to be rather at the beginning of the week in range expansion mode, maybe after, as we've seen in the example, after a day 1 3-day cycle, daily fake out low, and then coming out of level 1 or level 2, take the long continuation trades in a trending week, at least in the beginning of the week trending. So this could be front side until Wednesday potentially, or even also in the Wednesday continuation. Or if we look at a trend week, it might also go all week. So if we are in a higher time frames bullish situation, I mean, you see that at the moment with gold all the time. I will also show you a gold example afterwards. So you really want to take these day one runner long into the week potentially, because you want to see that, and then take the breakout continuation on Tuesday or Wednesday, or if it's really a trending week with a parabolic channel, you also can take those trades on Thursday or even Friday. So really check where are you in the week and what's the weekly template and pattern, and then see if that's a real bullish continuation week. Then you don't try to counter trend that, then you really try to take these kinds of continuation trades. Everyone tries to short then typically, and you just go long and make your money. So if we think about multi-time frame, that's my major system addition. I explained this in many other videos, but also in this case here, it's the critical element to judge if this is the right trade to take. So we always follow the breakouts. Breakouts show the trend. In this case also we want to have bullish bias on all the higher time frames to take such a trade typically. Then we check if the daily and the 8-hour are aligned on the day. So you want to still be in daily breakout. So you don't want to have want to have it previous day high hit and then you are in a fake out. You really want to have the previous day high untouched for these kinds of trades. So you kind of coming out here from a daily breakout, then it pulls down, and then you take the parabolic continuation and check the 8-hour that you are really in an 8-hour fake out low or breakout to take these continuations. The fake outs show the traps, so you want to see the fake out lows for these kind of trades. No fake outs high in your front, because this could be a counter trend signal. Then timing gives the rhythm, as we said. So you really want to have you want to look into the story of your specific session. For these kinds of trades, sometimes it's also okay to take a blow off with the open first bar. I like to do that. So if you see that the pattern is pretty nice and the setup is already confirmed with New York Open, especially with DJ30, for example, then you very often can just take the first bar in the first 5 minutes if it looks nicely and just join the blow off and then take the blow off to the high of the day. This is often over in like 15 minutes and then you're already out of the trade and done for the day, when it potentially also pulls back afterwards again. So really follow the trend, follow the breakout levels, follow the multi-time frame alignment. And for these kinds of trades, you really want to have all these bias signals in your back. So before we go into the examples, Trend Predator also helps you to see to identify the setups, of course. Here for a moment, what you're looking for in the Trend Predator setups. Trend Predator is my major indicator that I coded myself, where all the signals and all the elements of my system are coded into. In this case, you would look for a previous day breakout, fake out low. The current day then be in breakout or inside if the breakout was the day before, and then you take the breakout continuation trades. So breakout low of day or low hanging fruit, and you want to have the uptrend context fully aligned across all time frames. I will show you this in a minute, how this looks on the chart and with the Trend Predator indicator. So let's go to the charts. So now here, first example. all what you're seeing here on the chart is done by my own indicator, Trend Predator Pro. So it really shows you the highs and lows of the especially critical time frames. So you have here previous week high, for example. The blue ones are the daily highs and lows, and then you see the breach levels. So here, if it breaks out, for example, then this is green and colored that you are bullish above this level. And then you also have this on the 8-hour and on the 4-hour time frames here. So the gray ones are all the 4-hour bars, the orange ones are the 8-hour bars. So here, what's the pattern? You already see, as we have seen before, it's exactly this pattern. Monday does a breakdown and comes back up again here this day. So this is a day 1 3-day cycle. As soon as we are hitting this level here, a daily fake out low, then breaking out on a Tuesday, Wednesday trading inside first around this breakout level. That's what you typically see. How do we judge then the situation? We are looking at the multi-timeframe table. So here you see all time frames, all the higher time frames are bullish. So the daily is in breakout, week is in breakout, and the month is coming out of an inside month, also bullishly, potentially in breakout. I don't see this right here. The week is even a first green week, the day is a first green day, so this looks all pretty bullish. You could also then, as we discussed, wait for a peak formation high short, but in this case, of course, you don't do that. The only thing that you need then to confirm is the lower time frames. You have here the 4-hour and the 8-hour, and the 4-hour currently is in fake out high, the 8-hour is in breakout, and 3 longs extended. So you need to be a bit careful, and you especially don't trade into a 4-hour fake out high. If we look at the setup and context table, so Trend Predator Pro also reads already this bias situation for you, and it already shows you it's a healthy uptrend. That's because all these time frames are bullish, and it also identifies the trade already. So a previous breakout continuation, in this case low-hanging fruit, because we are in an 8-hour breakout. But we are just now right after London session, and I want to show you how to look at that coming into the New York session. And this is a parabolic session template on the day. So you see here Asia makes a peak formation low, then it comes up again, London makes a peak formation high, and then we are trading back inside. So you already know you want to wait for another trap, fake out low potentially, and then for this trade you want to take a continuation long trade to the previous day high. So let's see what's going on. So it's trading back down here, but stays inside this range, but loses the daily level, and it comes into a daily fake out high. So you could also say I'm now looking for a short trade. It's even a 2-star trade here, but I would be very careful because the higher time frames are all bullish. So as you see, it very often is completely dependent on this specific level, the daily breakout level. As soon as we are trading below, we are bearish, daily fake out high. As soon as we are coming back up again, we are bullish. Then it's a daily breakout. And when do we look at that? That's timing. So we really need to see when do we, where are we coming into the session? What are the time rotations doing? And then we are looking at a specific trade. So let's roll a bit. What's happening? Now it's coming up. So you see here, now we have a 4-hour fake out low breakout, 8-hour fake out low breakout. So now from here it's really launching, and you really see that it came down here and was trapping the shorts out of this parabolic situation, and then coming into the New York session we get our blow off, and it then from here just trades up back into the high of the day and then goes even a bit further. But that's exactly the pattern we are looking for, and you see then it collapses again. So we really, as a target in this case, would shoot for the high of the day. So you can take this after the fake out low here from closing price, if you like, something like this, for example, and then just to the high of the day, and there I would just go out with a first touch exit. So something like this, typical R3 trades, that's all we need. So you have the short-term trap, and then you get the continuation into the New York session and just take it to the high of the day. So that's example number 1. So here one more example, gold, 27th of March. You see here again, if we look at the bias, we have a bullish bias here from the day, week and month, all in breakout, so very strong uptrend, and the day is in breakout. So here this is the current day. We are now on a 5-minute time frame, so it's working up, and already Asia was breaking out, and then London made a higher high just below the previous week's high, and then was pulling back down. So you kind of have a parabolic pattern on the day here. That's a clear parabolic day, so just higher highs and lows coming into the New York session with a huge dump, coming back to the daily breakout level. So you see here from a context perspective, at the moment it shows you a healthy uptrend. The setup now would be a reversal high of the day, even because you are at an 8-hour fake out high. But in this case, this just means that you don't take any trades. You see it no quality, and it's also counter trend. So this is just because the 8-hour switched to fake out high. But we are also in gap time and coming into the New York session, and we of course do not short here. So if we were looking for a short, that's the daily breakout level, then we would like to see a low here, and then a pullback up into the New York session, and then a rollover. But in this case, this is a huge A-top in a bullish situation, parabolic pattern on the day. So what are we looking for? We are just looking for exactly what we just discussed before. So we just wait what's happening, and you see here it does a 4-hour fake out low then into the New York session, and it's as soon as we reclaim this 8-hour level, then we have the 8-hour in breakout, and you see here then 8-hour breakout, daily breakout, all bullishly aligned, and then you get your setup signal here. Breakout continuation, low hanging fruit. This is exactly your trade, trend trade, all time frames aligning, 3-star target would be high of the day. So from a planning perspective, you would probably take the entry around here, target somewhere up here, something like this, R3 trade. That's what I'm typically shooting for, and then we just let it run and look what it's doing, and you see it's just coming up again and hits the high of the day, in this case just continuing the bullish trend. That's 150 pip, depends on how strong, how you aggressive are with your stop. It's easily an R3 or also more. That's exactly the same pattern, but with the breakout on the same day. But if you're in a nice overall parabolic pattern on the week and on the day, this is absolutely valid to be taken. Next situation, it's gold, 5th of March this year. Similar situation, so breakout the day before on a Tuesday. We are now coming into the Wednesday, trading inside, and you see again uptrend healthy, day, week and month bullishly. Then it trades into the day, and you see you get a parabolic session. So it's a peak formation low, Asia peak formation high, London now trading sideways in gap time, approaching the New York session. So you are ready again, waiting for a long, but you don't go long from here, of course, timing. So we want to have the session to start and then look at behavior of price into the session. So let's let it run into the session. now for 8-hour bar closes, still trading sideways into New York Open. New York Open pushes it down. So then for the moment there is nothing to do. Breaks down into with the open, 8-hour breakdown. Then you see the lower time frames are conflicting the higher ones, and you just observe from here what it's doing. Then it comes back down, retests the daily breakout level from the day before. You're still doing nothing. I would not take a long from down here because the 8-hour and the 4-hour are bearish. So you really could also get a lower time frame low hanging fruit. So you're really careful there. But then as we go further, you will see that it's coming back up again and reclaims this level here with time rotations here coming into end of second hour. Here is closing price, so you could take a long as soon as it clearly comes into this range again, and then from here target would be previous day high, something like this. That would be an R4 with 160 pips. That seems reasonable to me. And then from here you just let it run. It came back one more time here into third hour. That's why I typically wait for the third hour rotation. This would have made sense also in this case, but as you see, even this would have been okay. So this would be the continuation fake out low on a lower time frame for your entry. So you could also take it from here, but then it's a very nice continuation to the previous day's high, exactly the pattern that we are looking for. So maybe last example, one that it's not working out. I always like to show and look at examples that are not working, that you also see how it looks like if you shouldn't take the trade. So here you already see it's an uptrend that's overextended. So it's already yellow. We have all time frames bullish, but the day is in 3 days of longs. So that means that we are a bit careful, of course. Then we come into the day breaks out in Asia, makes a peak formation low in London, and then breaks out again in gap time. This is also a strange pattern. I mean, some say it's a higher high, but it's not on the inside. So you have a high in Asia, low in London, and then the high in gap time, and then grinding sideways into the New York session. That's not a very nice pattern. But still, it could work out. So we still observing that and see what the signals are showing us. So then here you get an engulfment down. So reversal high of the day, counter trend, because you have an 8-hour fake out high here, trading back down. So then of course there is no long as you are in an 8-hour fake out high. Here is the this daily breakout level. So you only would long as long as you are above that level. But here we now lose that level, and we are in a daily fake out high, and then it already shows a short setup here, but it's still counter trend because week and month is bullish. So I wouldn't take a short and I wouldn't take a long here. So I wouldn't take anything because it's just conflicting in both directions, and you are trading exactly around the critical level. So you're just observing. Then it comes up again, down again, and it just trades. You know, you see also closing prices also here. It just jumps around closing price. Does not reclaim the 8-hour again. So no long. For a long, you really would like to see a short-term short trap. You have a 4-hour fake out low here, but the 8-hour is still in fake out high, and you never want to trade into an especially fresh 8-hour fake out high. So there is just nothing to do now. Then coming deeper into the session, New York Open here pushes back down, engulfs. So this could be 3 pushes down and now trapping the shorts to go higher, but we never take a long from here. So we really would wait for a reclaim of that level here. So let's see what it's doing. Going sideways. What's the time? Now we are coming into the end of the third hour. the moment still all bearish, coming down. Now we get an 8-hour fake out low, but we are still below the daily fake out level. So day and 8-hour are not aligning, so still nothing to do. No short because we don't lose the 8-hour yet. No long because we are trading below this daily fake out level up here. So let's see what it's doing from here. Trading around the 8-hour fake out low level, coming back up again. Let's let it run into the end of the session, coming up again here, trading around the daily breakout level, but now the 4-hour is closing. We are coming into the end of the session. There is nothing to do. You see, this is where you don't trade. You have an 8-hour fake out low here, you have an 8-hour fake out low to the top. You're trading around the daily breakout level. There is just nothing to do. It's confusing, conflicting. You see how this table is mixed. That's just a pass, and you don't risk your money on that. So that's it. If you like this thinking around trading, then like the video, leave a comment. If you have any questions, join the channel. Maybe join my Discord. We discuss this type of trades all the time. If you want to dive deeper, you can look at my playbook where I have even more of these setups discussed very deeply. You can try my indicator, the Trend Predator. If you follow this link here, trendpredator.com, you come to my web page. There's a 30-day free trial. It does really all the analysis you need for these type of trades, and also signals you the bias and the moment you should take a trade. If you want to dive even deeper, you can also go to a mentoring program with myself. I will guide you through all the analysis and all the thinking around these trades and around the process as deep as you like. So thanks for listening. If you have any questions, leave me a comment. I'm happy to discuss it with you. Otherwise, thanks for your attention and have a nice day.